Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Anshul Gupta, who is a director at Realis. How are you today, Anshul?
I'm doing very well this morning, Zach. How are you?
Very well. I suppose 48 hours or nearly 48 hours after the pain and misery that we had on Wednesday, well, pain and misery for some, perhaps, it's probably worth having a little rundown of the budget. And a lot of people already put in their pennies worth in terms of what the budget meant, but maybe you can give us a new angle. I suppose you're more of a finance angle that you specialize in?
Yes, well, we specialize in finance. So I'm a director at Realis Finance, Realis. We provide banking solutions. We're a digital corporate fintech, and we do things such as corporate banking, investment banking, wealth management, international remittances and payments. So we are concerned about capital flight. Having seen the budget, you were very right to talk about pain and misery because there's, broadly speaking, taxes have gone up dramatically, borrowing has gone up, and the cost of borrowing has gone up dramatically as well. We have seen on the markets on the bond markets immediately after the budget, the cost of borrowing for gilts went up enormously, as much, if not more, actually more than when Liz Truss had her budget 2 years ago in September. I think it was August or September 22. So the markets have not reacted well to Rachel Reeves, the first female chancellor. In fact, it seems that she spent the first 15 minutes talking about herself rather than discussing the state of the nation or the nation's affairs. But perhaps it is remarkable that she is the first female chancellor, although we've had 3 female prime ministers, which I would have thought was more impressive.
Yes, perhaps Rachel decided that we really need to know the person who's actually going to crash or could crash the UK economy. But I think the read across to the mini budget and Liz Truss, it seems similar in the sense that the initial reaction has been negative, maybe not as bad as it was on the stock market from the mini budget, but the pound falling, etc., etc. That has been quite significant. Do you think that this is just a temporary thing, or do you think that it's going to get worse?
Well, I think it's just the start because there were a lot of surprises in the budget because during the election campaign earlier this year, Labour promised they wouldn't raise taxes, and they have raised taxes enormously by 40 billion, and they've also raised spending by 70 billion. So that means they're going to borrow an additional 30 billion. And the cost of that borrowing has already gone up dramatically, as we just discussed. And I think this is just the start of, what will be the reign of Keir Starmer and Rachel Reeves for the next 4 to 5 years. So, yes, I think things will only just get worse. I think there's a lot of. I read that something like 10,000 high net worths had already left the country by approximately the end of the third quarter. So now we're well into the fourth quarter, so it may be even more than 10,000 high net worths or ultra highs who are leaving the country.
I suppose if there were more high net worths, if people were rich enough to leave, they would. That might be the other implication of that.
Yes, it's it's one thing raising taxes, but the thing is that raising taxes does not actually lead to more taxes. Raising tax rates, rather, does not actually lead to more taxes being collected. So there's actually, classically, the Laffer curve will tell you that if you raise taxes beyond a certain point, people start to avoid paying taxes. Some people evade paying taxes, although it's illegal, they will still do it. Some people choose to stop working or reduce their working hours because, shock horror, they don't like working and paying the government their money. And of course, some people who are mobile will leave because they can afford to do so. So I think this will just, to answer your question, will this just get worse? I think during the course of this government, I think we will see a declining number of taxpayers in terms of the tax base will be declining, but they'll be taxed more and more heavily. But tax receipts or revenues will actually be declining. And Mrs. Reeves will find that she will actually have to be even more, shall we say, strident in her approach in terms of trying to attempt to raise taxes. from a dwindling tax base. So I think, yes, things will get worse.
Well, I think probably, I mean, it was very easy to knock our new chancellor, but the reason that, say, the mini budget failed is because the markets got spooked by unfunded tax cuts. And here we've got, I suppose, unfunded spending, because even though taxes have gone up 40, you said that, the government's going to be spending 70 billion, but that amounts to the same thing. The only difference between the mini budget and this budget is that presumably if Liz Truss and friends had been able to get their way with the unfunded tax cuts, at least then the economy, the tax could have been paid by the growth of the economy. Whereas here,
Yes.
there isn't any growth to fund apart from taxing more on a declining wicket, let's say. We can't, I mean, she's boxed into a corner, really.
Yes, she is. I mean, even the OBR, who are impartial or supposedly impartial, but they said that this budget will affect growth for the next 5 years, and it'll significantly so. So the economy won't grow as much, and so she is taking an ever larger slice of a dwindling cake, or a, so it's more for her and her compatriots in government, or should I say, comrades in government, but it's less for you and I and the average punter on the high street in his pocket. So I think she has kept the benches behind her, the people on the benches behind her, happy as well as her boss. But apart from that, universally, this budget is not exactly popular. I don't see anyone extolling the virtues of what she's proposed and passed.
But isn't she giving some money back to to working people, as she calls them, which means basically, I presume, people who are already who are actually quite poor, let's say. So people like train drivers and minimum wage and stuff like that. So do you think there's anyone who's going to like this? Do you think there's any benefit from what they're doing?
Well, train drivers, they will, I think for a 4 day week, they're earning something like 80 to 90,000 pounds now because she's given them an above inflation pay rise. So pro rata, they're earning as much as an airline pilot who has, say, 4,000 hours of flight training. Whereas to train a train driver, if that makes sense, it probably takes about 6 months instead of years and years and years. So they will be happy. But and yes, people on minimum wage and the living wage, that has gone up to some degree, so that should make them happy. However, she has also increased NIC, national insurance contributions for companies and business owners to 15%, and that is where the majority of the money that she hopes to raise will come from, or she hopes it will come from, because she's hoping to raise 25 billion from NIC, and the problem with that is that. If businesses have to pay more in national insurance contributions for every person they employ, well, it's not surprising that they will actually employ fewer people or hire fewer people in the future. So and she actually admitted yesterday during an interview that it will actually affect people on lower earning incomes because it will affect them in the pocket because they're less likely to be able to find a job.
I mean, just trying to play the devil's advocate, which I obviously is quite difficult here.
Yes, of course.
Could it be the case that even though we've got the 40 million extra tax and we'll borrow an extra 30 or whatever the metrics are. I mean, don't really believe those things either because they always change. But could it be the case that this rejigging of tax and the economy will work because the economy is actually strong enough to take a 40 billion pound hit, and we can borrow with interest rates maybe going down over the next year, or we can borrow extra without too much pain. Could it just be absorbed? And so we don't have the nightmare scenario that maybe the conservative side would be looking for.
Well, it's not necessarily conservative opinion because I think the economy grew at in the last quarter at 0.3% or 0.2% of GDP growth. So it's not exactly growing. It's not gangbusters at the moment. And yes, GDP is set to grow at a slightly greater rate, but the rate of growth is diminishing according to the OBR. And I think that this is not likely to be fortuitous because, well, it's hard to see that this is the country and the economy is resilient at the moment because interest rates are 5%. Andrew Bailey has not reduced them significantly during the course of this year, although he's talking about having now. There's one more. I think there's one more meeting or two more meetings before. I think they're meeting on November 6th or 7th, and then there's another. There may be another meeting because they meet every 6 weeks. I'd be surprised if he reduces interest rates twice this year. I can appreciate he might drop them once, but interest rates are still very high at 5% compared to Europe, which is much lower. So I don't believe that the economy is resilient enough with such high interest rates and a very anemic growth to withstand such a shock of such a large increase in taxation and such a large increase in borrowing.
Just finally, getting back to Realis and your day job. What's the feedback from your clients, that people you talk to, etc., about the Britain under Labour and the latest budget?
Well, there's a lot of people who actually want to leave the country. I mean, I think that because we have a global footprint, so there's a lot of people who want to move money out of the country, and fewer people who want to bring money into the country, into the UK. A lot of people I know are leaving or making preparations to leave, or being sort of based part-time abroad, whether it be Jersey, Guernsey, Isle of Man, or other jurisdictions which are more friendly, such as Abu Dhabi or Dubai, or even sort of New York or Paris or whatever, because they just they find that the prospects for growth, the prospects in terms of taxation, regulation, compliance, it doesn't look very appealing at this moment in time. So I can understand that, if you can, as I think Bill Clinton once said, a man in Tokyo can push a button and move £1 billion or dollars from London to New York, or New York to London. Well, money will leave and people will follow. And the thing is that the tax base, I think something like the top 1% of earners pay something like 27% of all income tax that is collected, and the top 10% of earners pay over half of all income tax collected. So those people will, if wherever possible, will reduce their working hours because they don't want to pay more money to the government, or in fact leave the country if they can afford to do so. So I don't, the feedback I'm getting from our clientele is that they don't want to base themselves in London. They don't want to have capital in London. If at all possible, more widely than London, they just want to leave the UK.
Well, I'm sure that things will come out well in the wash over the next few years, and we'll look back and laugh at this particular scenario we're in at the moment. But in the meantime, Anshul Gupta from Realis, thank you very much indeed.
Thank you, Zach.